So hello to all of my good friends out there in the trader world. It is yours truly, Mr. Doug with Trade with Doug. I come to you today bringing superior knowledge your way so you can make some money. That's all I'm doing here, man. That is all I'm trying to do. Take it or leave it. So here's what I want to talk about because I know what is on your mind right now. You're sitting there thinking, dude, why did the market go higher? Oil is out of control. Gold's out of control. Inflation is out of control. The Fed doesn't have a clue to what's going on, and we're going to war. It's World War III. Why in the hell would the market go higher? I'm going to answer that question. And I'm going to do it in a couple of segments and try to remember it the best I can without sitting here and just rambling on, because the first thing we did today was get long. Now, a lot of this will always be, let me please repeat these lessons to you guys so you can please understand. Always take this with you. Number one, please take this with you. Number one, the market is never rational. It was running up like crazy and people were buying stuff like it was going out of style when they shouldn't have. Now, you have to understand that 95% of all investors and traders are always doing the wrong thing. You see, the market is like a tool for trickery. That's what it does. That's what every rookie makes a mistake. What looks obvious is never obvious in the market. If it looks too good, you're in trouble. So here's what happened today. You had the perfect bear trap already set in this market. Just like 2 to 3 months ago, you had the perfect bull trap that was set in this market. We're going to talk about that first, but I just want to jump ahead real quick. I will tell you whether or not I think this rally is going to go higher. But let's talk about the tool for trickery, which thou is the market. So think about this first. The traditional herd. And if you don't know how to think about this, remember this is hardwired into our DNA. This is what I keep trying to explain in all my checkmark trading system courses, why these strategies work. You have to understand that the market is geared to do that. It's in our DNA to have FOMO, to chase. But here was the perfect bear trap. The markets were already in somewhat of a free fall. So over the last several years, since 2018, this is the longest period of time we've gone through a correction, and it's probably one of the biggest since the financial crisis. I'm not saying in terms of, it's about 14% from highs to where the S&P is. I've got the S&P ES futures up here on the list. So first of all, you're down a significant amount already. And if you look back historically, which I don't have any reference charts for you, we normally don't see, but every 5 or 6 years, 20%, 25%. So we have to go back to COVID to see something that exceeded 20%. Before that, it was that banking issue. Remember when the Fed raised rates back in 2018 and so on. So you really reached this long, drawn out correction that's lasted about 55, 60 days or something like that since really the beginning of the year. It's just been down, a couple bounces here and there. So already the thinking of the normal investor and trader is bearish, that the good times are over, and they're probably right about that part, but you just keep going down. So first think about the mentality you might be under. Market's going down, market's going down, market's going down. Everybody's sort of hypnotized into this bearish market. That's number one. You also come into the Fed, which has been my talking point through all of my market mutterings, through all of the videos I've done. I said specifically, and I still stand by this statement, the Fed still controls this market. Make no mistake about Russia, Ukraine, it can cause some short-term impulses, but the real true king in this market is the Fed. And what is the Fed going to do in the March meeting? All eyes are going to be on that meeting. So it's going to be hard for this market to continue to sustain any type of rally, knowing with the wishy-washy, constant changing of tone from the Fed. So when you take this in with the undecisive Fed that seems to not be able to either control or inflation and avoid a recession, you put all of this stuff and we have this perfect storm where Russia just invades Ukraine last night. Oh my goodness, war is here. And you know what? I want to say this the nicest way possible. We already kind of knew this was coming. It was been forecasted. There were jokes about, what do you announce your war plans now on Twitter? it was something that really wasn't that much of a surprise. So it happens late last night, and the first thing that you do is get some significant panic. So here's where I'm saying, without trying to confuse people, because I have a tendency to rant sometimes, I apologize. Let me move some of these charts down a little bit here. You have all of this bearish tone. So think about it. Market's going down every day. Lows are being taken out. People are looking at their investments, watching them melt, and they don't know when to get out. And finally, this news comes out. Russia invades Ukraine, and it's a capitulation point. It's a point where everybody just throws their hands in the air and says, I'm done. I'm done. Just like they did a few weeks ago. I'm done. I'm done. And it's normally right when you say, I'm done, you're not done. It's not. That's the wrong time. Have you guys ever been in that? You sold just at the right time. Right? Market is a tool for trickery. Now, what can help you guys? So first of all, let's talk. So perfect storm, everything was lined up perfectly for this to happen. There was a potential there. But what solidified that, because as we opened the market, there was still a chance for mass panic. And maybe we still get that. But ultimately, everything, as I have said over and over and over and over and over again, it always comes down to the chart. If you can just block the noise out and never ever watch it, the actual clue why we got long this morning wasn't a magical miracle. It was right there in the charts, and I'm going to show you guys what I'm talking about. It's right there. Now, I didn't know that the market was going to stretch its legs this much. We'll talk about that in a second. So first, remember, most traders are always wrong. I'm sorry, but that's the truth. The market is also a tool for trickery, that it is the complete opposite. Because think of this. If you didn't see the reversal coming in November, if you didn't catch the top there, then you're definitely not going to know when the bottom, right? If you didn't see that was the top, you're not going to know if this is the bottom or not, right? But here's what I want you guys to remember, and the main takeaway from all of this. It's right there in the charts. All today was just a capitulation day and a day of opportunity. So here's what happened right here. I'm going to highlight a couple of these things. Always listen to the charts. Everything you ever need to know about anything is always right here in the charts. So here's where the news comes out last night about Russia, Ukraine, and you follow this up with a pretty good, I mean, let me go back even before that. In all of these videos I've done, watch them all over the last couple of weeks. I said if we lose 4,300, we're going to have some problems. So we lose 4,300 here, and we sell off into the close. So that is a technical level, closed at a yearly low. Right here was the previous lows. So we close at a yearly low. So technically, that is a technical breakdown. Now, what you have to understand is normally when things do break down technically, they always kick back a little bit. But then Russia-Ukraine news comes out, and you get an additional drop. Now, from the time this thing was closed to the time it was open, I think we were about 110 points in the negative. I've always explained this thing to everybody who's ever traded with me, every course that I've ever taught. Range. There's so many traders that are not trading using range. What is an expectation in a day? So if something is moving $5 a day, $10 a day, and you wake up and it's already down 12, you're outside of normal range. You are running the risk of oversold conditions. And the more oversold, the more the reversal. The more overbought, the bigger the reversal. It's always been that way. And you go back to 2018, look at these videos that I had done back there when it was dropping. I said the biggest crashes lead to the biggest reversals. And look what happened. So you have all of this panic. But again, I want to go back to the charts and show you guys this, because here's your clue. After that, these are 1 hour bars. So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You had 10 hours of overnight activity. But what do you guys see in this chart? What do you see here? Think about it. Where's the new lows? Where is the breakdown after this panic? After this is when Russia attacks Ukraine. You know, again, They're still attacking, right? They're still attacking. There's still a war going on, but where's the panic? Where is the panic? So the market opens up, and what don't you have? You don't have any sellers. Where are they? Now, I'm not saying that they won't emerge in the future, but here's what I'm saying. If they're not there right now, what is the next probable event that happens? Tell me, what's the next probable event? Market bounces. And you see it here clear as day in the chart. Again, you could have never looked at the news at all. You didn't even need it. You didn't need it. It's here. You could not, simply put, period, end of story. You simply could not make a new low after all of the panic. So the world is coming to an end. World War III is starting. Inflation is out of control. We got a clueless Fed. The market is in bear market territory and it's down 14% for the year. Where's the lows? Where is that panic? You didn't get it. Now it's a free-for-all for buying. So now you flip that script in thinking, okay, do you buy this? And the answer is, why would you buy it? What really has changed outside of yesterday? Because if you think about it, now maybe it goes a little bit higher, get a couple day rally, I'm not saying that. But is the worst behind us? The answer is, I don't think so. Because as I said earlier, the king of this market is the Fed. Until we get a clearer direction of the Fed, or until Goldman Sachs front runs the Fed because they got the info, right? We're not going to get a clean direction. So there's no way, maybe it goes higher, but as a logical thinking, smart, intelligent, long-term trader, you can't buy this here. If it goes higher, it just goes higher without you. You can't put your chips on the table, because why would this bounce be any different than this bounce or any different than this bounce, right? Look at what happens here in the charts to show you here as well. I'm going to put up the daily chart here so everybody can see this. This candlestick right here, take a look at this one, looks very similar to this candlestick here. And what happened the next day? I'm not saying it's going to happen tomorrow. There was a sell-off. It took 4 more days of trading to establish that low. So this very easily could come down here tomorrow, bounce around there, then pull up here and do this kind of move, reconnect with the 200, and then roll back over. Very possible. But the bottom line is this, because I'm going to cut this tape short. I'm going to ski-daddle on out of here. Remember that this is what the markets do. Just like up here. Where were the additional buyers up here? Where were they? Charts told you that. Charts told you this could not find any more buyers. Every breakout up here was failing. So the next thing, lower. Now, we never know if it's going to be a crash, how much lower, how much higher. We never know that. But we have to position ourselves properly in the first place. The thing you always have to think of before you make a trade, is this a trap? Is this market trying to trap me? Where is the sentiment? Where is the herd? You get that's why we look at the fear and greed sentiment indicator. You're too much fear, too much doom and gloom, too much fear mongering. Market will bounce. Too much greed, too much euphoria. Markets will sell off. That's exactly what happened in November. Everybody's living the good life. Easy money, free money. Party never ends. Party never ends. Party does end. It will end. And there'll be a time to re-enter the party. So guys, remember that. It was in the charts today. There was no panic. All the news was out on the table. The worst was out. And there were no sellers. And that's all you needed to know. You didn't need to know anything else about what was going on. And you could get that right from the chart. You didn't need to look at any sort of news source for that. Now, after this, we need to see that tested. We need to see that this is not just some sort of one knee-jerk reaction FOMO chasers rally. Because remember, the biggest bounces come from the biggest sell-off. So yes, they will be very exaggerated and big. But by no means is our problems behind us. This was just one of those moments where the bears got caught with their hand in the cookie jar. Things started to rip. There were many stocks that had some serious value to them that were down short-term oversold with some significantly high readings that were due for bounces. And that's all we were playing, was just the bounce. We're not playing all times highs yet. We're just playing the bounce. So if you need help, guys, make sure you go to tradewithdoug.com. Make sure you go to the penny pound, visit me. I hope you learned something from this video. Just remember, it's David Copperfield, not the spy. It's trying to trick you. Take care, trade well. I'll talk to you soon.